right, let's move on. We've got Ashu Singhal, who's the MD at Mahanagar Gas, standing by to talk a little bit more about the growth roadmap. Good to have you on board. Now, despite the price cut that you've taken, the unit margins have been higher. Your margins have been around the higher end of the guidance. Will you be exceeding that for the rest of the year?
Yeah, I think the prices have been increased slightly. 1.5 rupees we have increased very recently. Otherwise, in March, in 2 months back, we have cut down the prices by 2.5 rupees. So currently, we are having EBITDA margins of 11.9 rupees. So we think it will be managed because 11 to 12 is our guidance, and we think that these margins can be sustained over the year.
The narrative has started that gas could finally come under the GST ambit. We've reported that on ET now. A lot of other channels are reporting the same. If that has to happen, how does that change life?
On any tax reduction or increase is always a pass through. As per the legal law, also we can't keep it with ourselves. So it will be a welcome step if the gas is brought under GST, because right now the input tax credit is not being passed on, or the customers are not able to pass on the input tax credit. Therefore, few segments will be definitely benefited, and especially the states where the VAT rates are very high, and even the excise duty in CNG is 14.5%. So those states will be benefited, but there will be some segments where the total input tax credit is not available. So there maybe the tax rate will be very critical to see at what rate GST will be applied on the gas.
One-to-one correlation between gas pricing and affordability. Is there, electricity beyond a point, you have to pay more for it. You don't stop consuming it. Similarly, if gas becomes cheaper after GST, could that lead to increase in demand, or this is just going to benefit the consumer, not search, it will not have impact on the demand patterns?
No, it will impact the demand because industrial segment is very price sensitive. So liquid fuel, yes, we are cheaper as compared to the liquid fuel. However, when it comes to the solid fuel or some other fuels, where the alternate fuel is much cheaper and also is under GST. So if gas is brought under GST, customers like industries will get benefited, and they will be more keen to take gas as compared to other alternate fuels. As compared to CNG also, if GST is applied, then the price of CNG will come down to the extent VAT rates of that state is there. So therefore, people will be more keen to take CNG vehicles. So there, the positive impact is expected to come in case the GST is applied in gas also.
In fuel retail, we know there is a mathematical formula, 15-day rolling average at which the retail fuel prices are calculated. But what happens in your case? How is the formula of gas pricing dictated and dominated? Does it change with the rolling average?
Yes, it depends on the portfolio or the gas procurement cost primarily, and the operating cost, and what is the EBITDA margins we are working at. So all these three things put together, plus what is the growth we expect, and also the alternate fuel price. So it's not as straightforward as retail petrol and diesel prices, but it depends on 3, 4 factors, and each company takes their own call about how they want to position their CNG and PNG with respect to the alternate fuels. Currently, if you talk about petrol in MGL case, it is 50% cheaper if you take about the mileage or the kilometer advantage also into being, and 20% cheaper than the diesel. So we think it is a sweet spot for attracting the customer, as in when a person takes a call about coming to the purchasing a new vehicle, whether it is CNG, diesel or petrol.
In the areas, in the cities where you operate, could you also broadly tell us that what are the pipe gas penetration levels? Do you see them changing incrementally? Why? Because it's becoming sheer convenient now. It's becoming sheer easy now. Availability is also undisrupted. There used to be a time when gas ki pipeline kat jati thi. At least that is getting over now.
Yeah, I think we are around 60% penetration level in the main GA1, which is the main Mumbai and Greater Mumbai. In other sites, since the infrastructure is getting developed, the penetration levels are slightly less, but there are certain issues like limited working season, the concrete roads, the permissions, delay in permissions, and very high reinstatement charges, which some of the authorities are taking. But anyway, our focus is to increase PNG penetration, and we expect that with growing numbers, like last year we commissioned around 3.3 lakh new PNG connection, which is highest in the country by any single CGD entity. So we are doing our bit to make sure that PNG is available to the maximum extent possible. There are certain other reasons, like some of the flats are locked or some rental flats are there which they don't want to come on to PNG. For them also, we have launched several schemes like 1 rupee per day scheme for the registration charges, and so on and so forth. We have launched several schemes to make sure that PNG is the preferred fuel as compared to LPG in the domestic arena.
For MGL now, what could be the growth frontier? One is organic growth, which is that you are present in cities, you continue to grow. There are some cities where you have almost monopoly status, so that advantage would be there. But what else would you do to say that, okay, if India is growing at 8%, what can I do to make IGL's, MGL's growth 20%?
That 20% is, I don't think it is feasible, because we have been growing around 5.5% last year. This year we target maybe 7.5 to 8%, more than 7% at least. And that will be in line with but India's GDP growth. But the point is that all the geographical areas across the country have already been licensed. So as you rightly mentioned, there are two ways. One is the organic growth, other is inorganic. So we are scouting for any good opportunity. This last year we have concluded the deal of, this year we have finally concluded Unison Enviro Private Limited in February. And other sectors also we are exploring, like LNG in retail outlet is one good sector. Then compressed biogas also we are following it up with the authorities to implement it. And there are other opportunities we are exploring. And as and when they come in, we will be announcing. One small equity we have taken in an electric vehicle value chain as well.
Oil marketing companies are expanding their reach and by their presence by perhaps, let's say, adding a EV charging station. They are cannibalizing their own retail business, but they're using the space. Are you also looking at perhaps using some of your outlets and some of your retail depots where you want to perhaps look at more monetization of them?
We will definitely look at the places where it is feasible, but at some of the places, like in our main heart of the Mumbai city CNG stations, there is hardly any space. If there is a space, we will prefer to add one more dispenser for dispensing CNG to address the problem of queues in the city. But where the space is available, we will be open to any energy source, and be it EV or, but EV again, the numbers are yet to pick up. If as and when the vehicle population grow, we will be in the right position to put up some charging points. We've tied up with one of the startup companies and put up two or three EV stations in our CNG stations in Thane area. So we have already started doing that, but we will definitely look for the economic and commercial viability as well to launch it in a big scale.
The business has two divisions. I'm broadly dividing it for the benefit of our viewers. One is retail and second is industrial. At what rate do you expect both these businesses to grow? And is there a different margin profile for both these businesses?
Industrial and commercial, last year we grew around 12% and CNG grew around 4.5 to 5%. This year we expect CNG to pick up. As you might have seen that this Q1 versus this Q1, the CNG has grown by good amount, and Q4 versus Q1 also 4% CNG growth is there. So if we extrapolated, the growth in the CNG segment should be around 7-8%. Industrial and commercial, we expect it to grow to the same levels of at more than 10%, maybe 12% or so. This quarter, industry has come down slightly because some of the customers have gone offline, but we expect that they will be coming very soon and start taking gas. The margins are slightly different in some of the segments, and like PNG having a steady segment, CNG keeps on varying, and industrial and commercial, we have linked our prices to the alternate fuel, like LD and HS and other fuels which are available as to industry. So there the prices keep on varying. So slightly it varies sector to sector that what type of margins we get.
All right. Really appreciate your time. Thank you very much for
so much.
joining us, and love to have more of you on the channel. Let's take a